This is going to be quite a panel. Just for full transparency and disclosure, this is being broadcast around the world by LinkedIn because there's so much institutional interest in the answers these gentlemen are going to give today. And so they're going to be heard. And why it's important is, here's an opportunity, problem and an opportunity. I like to frame things yin and yang. Here's the problem. ESG and sustainability has entered into this market very quickly, very rapidly on an uncontrolled basis. There's a dialogue going on where creating Bitcoin is bad for the environment. And it's taken on many different forms. It's found everywhere around the world. There's governments making policy decisions, uninformed policy decisions, about sustainability metrics around mining coin. And it is in fact hurt the capital markets for the ability for miners, these gentlemen and others that wish to raise capital, to do so. That's the problem. Here's the opportunity. Bitcoin itself, whether you believe it's an asset, whether you believe it's a property, whatever you believe it is of great interest to institutional managers. That would be pension plans, sovereign funds, and yet they own none. And why is that? Let me walk you through the decision-making process. I work in that world. I service institutional clients, sovereign, pension plans, you name it. What's happened over the last 36 months is that they are all beholden now to what are called ESG committees, sustainability committees, whether there's ethics committees on top of that, but also committees that concern themselves with the origin of assets, and they actually have a filter. They make decisions around ESG and they say you can or can't own that asset. It's not sustainably created. Not just Bitcoin. This goes for many other asset classes too, which is why there's a lot of debate going on. Now, here's the opportunity. If those institutions were just to take a 3% weighting, which is very typical in an asset or a stock or a bond or land or property, it would represent $1 trillion worth of purchasing of Bitcoin itself. The increase in value would be geometric from where it is today. So everybody in this room, everybody, is incentivized to solve this problem for those institutions so that we can unmask this logjam for what it is. A tremendous amount of interested capital that wants to come into this asset class but can't do it right now because it's got the wrong messaging around it. Because the truth is, as we'll discuss in a moment, that Bitcoin is actually good for the environment because it's forcing these miners to find the most efficient way to create the power to do the mining.
All right, tell it.
No as a sector, as an industry, as a voice, we have failed. We have not delivered that message successfully, and it's going to start here today.
All right.
All right? So let's start with Frank Holmes, who I thought he was going to spray paint himself green today. Let's talk about this problem, Frank. Let's get it right out here. I want to deal with the giant elephant in the room. Sustainability. How are you dealing with it in communicating with your own shareholders?
We, as you know, we're both fund managers, and I'm the chief investment officer, and I was trying to launch a Bitcoin ETF 4 years ago, and quickly recognized at that stage it wasn't going to happen. And it's this knowledge I applied and launched a couple of investors, the first public company to do crypto mining. And because of a fund manager, we had an ESG strategy at the beginning. And we were only in green energy at the beginning, and we've gone through the whole piece. But all the miners have gone down with this sort of thesis of we have to educate those sovereign funds, those other institutions. And I see a big change happening within the industry of reporting and transparency. But high blockchain itself, we mine both Bitcoin and Ethereum. We are mining in Sweden, Iceland, in Quebec, and in Brunswick, and we're only green energy.
So what is your definition? What is your definition of green energy specifically when asked by an investor? What does that mean to you? What's green?
To me, green energy is renewable sources. So
specifically, what would they be?
I would include hydroelectric, I would include solar, I would include wind, and I know it's not popular, but I would include nuclear. Nuclear is a good renewable source.
When an investor asks you, what are you calling green?
I'm aligned with Jason. It's wind, it's solar, hydro, geothermal, nuclear also.
An institution that doesn't own Bitcoin now comes to you and says, look, we're going to make an allocation, we're going to tiptoe in, 1.5% weighting of a $2 billion fund. It's a serious amount of money. But we have to know the provenance of the coin because our compliance committee won't let us offset with carbon credit. We have to know that it was mined sustainably, and in some cases, ethically. How do you answer that?
So when it comes to mining sustainably, you're taking the opportunity to use a blend of power. Most PPA agreements are really a recipe of power. You're going to get so much wind, you're going to get so much solar, you're going to get so much offset. And you also have the ability to use RECs, which are renewable energy credits. So I think, as institutions look at it, they want to make sure that we're not greenwashing our mining operations, but rather that we're actually using a certain amount of truly renewable and then a certain amount of RECs to offset what would be clean natural gas.
So Jason, did you see at a time, and this has been a very controversial topic that's been spoken of recently, that somehow we would tag green coin versus non-green coin, that there would be two asset classes within Bitcoin? Do not shoot the messenger.
I think an important property that makes Bitcoin valuable is that it's fungible. And one Bitcoin is always one Bitcoin.
Back to you, Frank. When an institution says, look, I'm going to do a weighting, I want to buy $1 billion worth of coin, and it has to be check the box for my sustainability committee, even though we know that this is an unusual dialogue to have, but it's got to be done. How do you solve it?
I'm sorry, Karen, again. The question is?
It's this. I need a sustainable coin, a sustainable asset. I have to get compliance to agree to buy it. How do you deliver that to me as a miner? And as a coin, a specific piece of property.
Well, what we do is as Hive does, is that we mine these virgin coins. They're untainted. They're not anywhere as bad. And we hold them. And we just continually mine Ethereum Classics, sell that, we'll pay the electrical bills, and keep hodling. And so we think that our coins are more valuable because they've been untainted. And they've only come from green energy, and they should have a two-tier price system, and our coins should be more valuable. That's my personal opinion.
So you are basically going against the fungibility argument that Jason just made. All coins are basically the same and valued the same as they transact around the world 24 hours a day. But you're saying your frank coin,
Not a franc coin, it's a Bitcoin.
but it's a frank coin.
No, but it's what I'm trying to share with you. Our Bitcoins are green energy, and they've not been anywhere someone can tag them being in a dark pool, etc. I know that this is a big issue when there's software out there to make sure those coins are clean. So I believe that these coins are very special.
I've been in Bitcoin for a while, and
Yes, you have.
I've heard people always talk about, these mine coins are going to be worth more, and you show up, and I don't see that in the marketplace. I talk to these OTC desks, no one is doing that, and I think the people you're speaking of, they say that, they think that, but when they come up to the desk and they say, I want to buy one Bitcoin, are they really going to pay 20% more?
Well, we have an obligation here because the way I set this up is I simply ask the institution, give me your questions. I am simply a messenger. And so I am asking them, are you interested in allocating to Bitcoin specifically? These are very large pools of capital.
They won't have a choice.
And generally, they haven't made that decision yet for one specific issue. They don't want to get caught up in this turmoil, this debate, this issue that we're talking about now, and we should, because we need to send a message to you. We need to solve it.
But there's a way to do it which has nothing to do with the mining.
Let's hear your idea. You're speaking to them directly, right?
Which is essentially, a financial institution can create a fund where they only buy Bitcoin that has been sustainably mined, and then the institutions can invest in that fund. That's a way to do it without the miners having to even think about the difference.
But aren't you bifurcating when you say that? You're saying this coin is mined sustainably versus the historic coins. You don't know what the carbon footprint was for 17 years ago.
So the problem is there are only 900 Bitcoin mined today. And so to build a volume of coins sufficient for the $1 trillion that you're advocating the institutions want to have, there's no way you can get it by newly mined coins. They're going to go into the asset class. They have to go into the broader asset class if they're going to get any volume.
That's one answer. The other answer is the value of the coin that is mined sustainably becomes very, very high because they're allowed to own it. And they're willing, as Frank is saying, my coin's different than your coin because it's on a weekly basis. They'll pay more for it. You buy that?
No, I think we at various times have believed that financial institutions would pay different prices for different types of coins. And what I've learned is that they won't actually, because to Jason's point, yes, if you ask them the question, is it more valuable to you? Yes. Will you pay more for it? Most probably not. That's the answer I get from financial institutions.
But you just want them to buy it in the first place. That $1 trillion is outside of this room waiting to come in. That's the way I look at it. I own the coin because I think we will solve this problem one day. I say that collectively. When that happens, there'll be a geometric increase in the value of my coins, whether they were mined sustainably or not.
But I think if a person wants exposure to the asset class, this is the unique thing about Bitcoin. It's so limited in supply that if you want an exposure to the asset class, you're going to have to buy the broker market. There's no way you can invest in public company stocks like those miners. You can invest in other ways to get exposure. But if you really want to hold Bitcoin, either via a fund or directly, the only way to get a $100, $200 million allocation is to buy it in the broad market.
All right, let's go down that path. Let's talk about owning the stocks of your public companies as opposed to owning the coin you mine. Is there a thesis out there that you will eventually trade with the same volatility that the coin has?
Well, I think historically, at least right at the marathon, you look at our stocks, almost regardless of what we announce, Bitcoin moves, we move, kind of lockstep. There doesn't seem to be a lot of differentiation in our stock prices relative to the news we announce. It's really very much driven by what Bitcoin does.
We all have the same DNA of volatility. On a daily basis, it's plus or minus 6%. It is the funniest, strangest thing. It's the same as Tesla. It's just the same DNA of something that's perceived as being disruptive. But I want to come back to something that's really important. When I first went to try to launch an ETF, the pushback from the regulators, the SEC, was AML, anti-money laundering laws. And they were very concerned of some hacker getting paid Bitcoin and was going to show up in the New York Stock Exchange. And they've still not figured a way out to resolve that. So that is where I had this thesis that with us holding every coin we can and owning on our balance sheet, and it's never been in the dark cloud, it's never been out in that cyber world, it will over time have a greater value. And I think most of the miners are holding as much as possible, and those coins are great coins.
So let's talk about the regulator, because what's happened over the last 36 months, not just domestic, Switzerland, France, Germany, New Zealand, Canada, most of the European countries now have come to the conclusion that cryptocurrencies are here to stay, and eventually all currencies will somehow be fungible in a digital form. You think about just the idea of a $2 trillion stimulus package here domestically. Can you imagine the issues around printing $2 trillion of paper? That's never going to happen. So that's going to be some form of credit form, which is itself digital. Now, regulators in Canada were the first to allow Bitcoin in the ETF wrapper. And the assumption is, and I'd like to get your estimates, this is a very interesting asset class for individual investors, obviously. We do not have that here domestically. When do you think that happens?
We've been waiting for the ETF for 4 years. What ETF? There's always a split around that ETF. I think it's a positive for the industry when regulators finally wrap their head around it. But I think there's almost an upside to the delay as well, because if people want to get exposure to Bitcoin, they don't have an ETF to do it, well then they have to learn about Bitcoin and they can learn about testing it for themselves. There's almost this delay of work in our face to get more people on the same page.
Okay, So to do that, you have two options. You either go through the learning process of decentralized ownership, or you go to a centralized ownership like the wallet. You can basically download on your phone's buy. There's two different friction levels of cost there. The centralized systems are very expensive versus other financial assets. Not very expensive, really expensive. When you look at the basis points charged for these services versus if you learn how to go to central, 9 out of 10 people can't do it. It's too complicated. The industry itself has not solved the friction problem. Either you pay a lot, or you don't do it at all, or you get someone to teach you how to go to central and start working with the MetaMask and everything else. Nobody knows how to do this. That's a problem for your industry, is it not?
Well, I think there are a couple things going on. One, you may have read about the announcement that FIS is rolling out custody, buying, and selling of Bitcoin to over 300 million U.S. bank accounts through a platform provided by NIDA. That's 300 million people who will, using their bank app on their phone, be able to buy, sell, and hold Bitcoin. You can do it with PayPal, Venmo today, Square, etc. There are ways to do it with fairly low friction, but to your point, there are fees associated with it that make it expensive. One of the most rapidly growing sectors in the industry is Bitcoin ATMs. And those are predominantly used by people who are sending money back home to their families. Because if you look at the money bringers of the world, the fees that just payment organizations charge for sending money to the Philippines or wherever home it happens to be, it's very high. It can be up to 20% in some parts of Africa, for example. So being able to buy Bitcoin in an ATM and send it back home has been a rapidly growing market. I mean, there are tons of Bitcoin ATMs being deployed across the U.S. today. The U.S. banks want a piece of that business too. So I think the cost of ownership for Bitcoin is going to commoditize over the next few years. It's going to become very easy to hold, very easy to trade. There'll be tons of ETF type instruments, whether you want to hold public companies that are in the Bitcoin world, whether you want to hold Bitcoin itself, balances of crypto with other baskets of crypto with other currencies. I think we're going to see a plethora of products that people can buy and sell to get exposure to Bitcoin, including just holding your bank wallet on your phone.
What about the thesis, going back to what you do? There's someone that's not here today, Hut 8, the woman that runs that, told the institutions that were looking at her stock, I will never take a single coin off my balance sheet. Every single one that I mine will stay on my balance sheet. If you want to own Bitcoin, just buy my stock. It's all mine sustainable. I'll never sell it. You'll be a shareholder of a portfolio, and I will know the progress of every single coin. How do you feel about that? For solving the problem we're discussing, the $1 trillion prize.
So I think just the ability to own the printing press versus buying books, which is the analogy most people use for Bitcoin, the printing press for printing money or owning Bitcoin itself. It all depends on what sort of exposure you want to volatility. But I think for people who want to hold Bitcoin, most of the miners today are holding it because they believe the Bitcoin they're producing is going to be more valuable in the future. Many miners do yield farming to generate income off of Bitcoin, so they're not having to sell it to pay for operating costs. But as Bitcoin price grows, yeah, there'll most likely be pressure, and miners will sell some volume of it because they're going to be driven to grow themselves. And I think it's a capital-intensive business. Miners will hold Bitcoin as long as their balance sheets let them do it. There comes a point, though, where they have to start spending it to fund their growth operations.
They can basically lend it out on a DeFi basis and get fiat back to pay the bills, right?
Right, but if you think about the Bitcoin market, what many people outside of the Bitcoin community don't realize is 900 Bitcoin a day, it's a fixed volume until the next hack. The global difficulty rate, the hash rate continues to increase. If it increases 40, 50% a year, effectively any public miner's market share of that 900 Bitcoin reward will decrease unless they're spending to grow their infrastructure by 40 or 50% a year. The yield they get off the Bitcoin they hold on their balance sheet most probably isn't enough to fund that. And they're either going to have to sell more stock or raise that.
Jason, this goes to the real issue. Right now, the public markets are essentially dried up for a lot of miners that want to raise capital that are not public yet. There are about 7 deals that I'm aware of that I was interested in taking a position in that just ground to a halt. And when you ask the bankers who have a great interest in getting these things done, because they get paid 5 to 7% fees, they would like to clear these deals, but they can't get right back to the same problem institutions buy because they're waiting for the answer to this sustainability issue. They don't want to be tagged supporting the idea that they're going to use every piece of electricity to drop the power the band's going to need for the next 2 years just to start some New York facility, which is one of the deals that actually collapsed. It's supposed to happen. Hydropower didn't happen. New York put this potential moratorium in its state for 36 months. The capital dried up right away. What do you say to that?
Well, I think at Riot at least, and I'm sure other Bitcoin mining companies as well, we are still seeing a lot of interest in investing in these companies. Our stocks all have an incredible amount of volume. We trade over $1 billion in value in a day quite often. There's a lot of people still invested in the stock, so that gives companies like Riot, Marathon Hive, a very efficient access to capital to grow our business and allow us to retain as much Bitcoin on our balance sheet as possible. You mentioned the New York bill. I'm not really sure if that's going anywhere because I think the underlying story for Bitcoin mining and its relationship with renewable energy is important. Bitcoin miners come in, they are the buyers of energy of last resort. And where you find that is congested energy, surplus energy, energy that cannot get to people. Bitcoin miners are indifferent to their location. They're indifferent even to the time of day that they will consume power. And if there's certain policymakers, lawmakers in New York that haven't seen that yet, I'll tell you, the lawmakers in Texas do see that. That's why we're so happy to
I want to give you a question that I thought was the best. Okay? One institution said this: the industry has no voice. It has no one to tell its story to policymakers. They pride themselves on decentralized thesis, theory, origin of Bitcoin, and yet they have no voice when it comes to a New York policymaker saying, I'm shutting it down because it's bad. How is this? It's your industry. Where's your voice? What happened?
I think we're starting to see now the formation of different players in the industry starting to talk to each other and say, what can we do to help the community? What can we do to promote the good that Bitcoin can bring, the good that decentralization can bring? And trying to create transparency in data and information to the regulators and to the general public. And the North American Mining Council is kind of the working name, if you would, that is in the process of formation, is a first step in bringing the industry together to kind of talk about things, share information, make commitments about what we intend to do, and then educate legislatures, educate lobbyists about really helping our
Enforcing the Elon Musk phone call compliance.
Yes, that he was on a call with the group of miners, but the group of miners, all of us here on the stage included, are moving forward to become more transparent about the information we provide, really to educate regulators in the marketplace, the common man, if you would.
Let's ask this does this industry need a voice? No. Yes or no?
The results are our voice. The master plan.
I think the biggest thing with this is, when I first went into business, is transparency. And that was a big issue of getting transparency of your costs. Because being a public company, you want to be able to get more and more information. When you're mining, everything's transparent. Blockchain is transparency. So I think that this industry as a group is only going to be able to pull together to give more transparency on sources of energy, in particular where the sources are, what we're paying for that. And that's really the element to take on this sort of anti-crypto. And what's interesting for me here is yesterday that a lot of it's coming from Ripple. Ripple's centralized and we're decentralized. And so a lot of this narrative is so negative. I think that we're in a great position, and I want to share what we're doing in Boden, northern Sweden. We give back to the community. We have software that can go from 20 megawatts to 1 in 15 seconds. A hydro company can't do that at peak periods. And then we go right back up in mine. And so what does that do? It helps the infrastructure, the community. We're highly respected, regarded, and we go on mining. And then they turn around and call us up and they want us to participate on an expansion of 10 megawatts. Very attractive terms because that's part of the
innovation.
of sustainability. So I think, let me finish, I think what's going to happen with this group is that we're all bought into, let's tell a better story on ESG.
Okay, we're at zero time now, so last word, Jason. Voice, no voice for this. And are you a voice?
What I think is important is the story that Bitcoin miner, Riot, all of us on stage are using more and more renewable energy is a good one. But I think the story that needs to get out there is that this is not something that's just being done out of the goodness of our hearts. There are market forces in energy markets like ERCOT that are connecting loads like Bitcoin miners and renewable sources, and they are making those more viable. We're set up in ERCOT. Marathon's set up in ERCOT now. I think it's a great choice. And it's not just oh, we are using this much energy. Bitcoin miners are helping more renewable energy to come in because they have a load like Bitcoin mining. And I think all of us telling that story, however that comes together, vehicle medium, is a good one.
Oh no, you're a capitalist. Ladies and gentlemen, we're going to come here. Let's have a hand for these gentlemen. The candidates and the digital structures for today.
Thank you very much.
So I don't know about you guys, but I'm down for buying any Bitcoin without any single approval myself. But the next case, or the next panel rather, is about the moral case for Bitcoin. So Bitcoin, as we said earlier, is a representation of freedom.